Good morning, everyone, and welcome to today's morning report with me, Richard Perry, for Tuesday, the 11th of February. We're going to be looking first of all at the risk sentiment handover that we had overnight. It continues to improve actually since that non-farm payrolls report and the ECB at the back end of last week. We've had a significant improvement in risk appetite around the world, and that certainly is shown in this VIX volatility index that came sharply down. That big move there came on Thursday on the back of the ECB press conference, and it continued on Friday with the non-farm payrolls report. So this improvement in risk appetite, or certainly improvement in volatility to the downside, less volatile, suggests that risk appetite is improving around the world, and that is certainly being shown in the charts. Certainly moves back away from the dollar. The euro is improving, sterling improved, also the Aussie dollar, which is another interesting chart, that continues to improve as well. So certainly that's what we're seeing at the moment. There's nothing major to go on in the Asian trading hours. There was a public holiday in Japan, which took a bit of volume out of the market, but the risk sentiment is certainly positive into the first early trading day in Europe. Certainly the stock markets are all higher. And investors are looking towards Janet Yellen this afternoon. And what she's got to say, that's at 3:00 this afternoon. That's the testimony that she has before the House Financial Services Committee. She's going to give an outlook on the US economy, how monetary policy is moving, and perhaps even she's going to give she'll have to answer a question or two on how emerging markets are playing out in the current financial world, and the impact that that's having, and certainly that could impact on investors today. So watch out for that. That's from 3:00. That is the only real bit of data or major macroeconomic news that you should be looking out for today. My chart of the day is an interesting one actually. I'm looking at Euro Sterling. Euro Sterling has been improving in the last couple of weeks, and certainly, as I said, with the improvement in risk appetite, that suggests that the euro is benefiting off the back of that, and it's back up towards, and it's looking at a test of this key 83.50 level, which, if it broke out above there, would certainly now break this downtrend that euro sterling's been in since July, and also complete what I would see as probably a bit of a base pattern you've got going on there. It would certainly imply an initial test of at least that 84.66 high, and then possible further gains after that. But certainly the improvement is, or that resistance is being eyed by the euro bulls. Maybe the momentum indicators are not quite on the same wavelength as yet. The stochastics, for example, are rolling over once more in overbought territory. And the last time we saw a stochastic sell signal was back in mid-December, had a bit of a move back to the downside, and also the MACD lines are still below neutral. So there's a couple of arguments to say that momentum is still on the weak side of neutral. However, you are looking at a test of this 83.50 level, and that is a bit of a tipping point, certainly. Also with this barrier that's at 83.90 as well, which is a historic pivot level as well on euro sterling. So a couple of key levels there to watch out for, and certainly if it can break above that 83.90, I'd be turning more positive. But at the moment, we're still waiting for this level to be broken at 83.50, and it could still just be another bear market correction in this euro sterling chart. So a bit of a tipping point we're looking at here, and an interesting time to be watching euro sterling. So I wish you good luck with your trading of euro sterling, and I will speak to you soon, and hope you get a chance to look at our other charts on euro dollar, cable dollar yen, and also gold, and I will speak to you later. Thank you. Bye bye.